Good morning, traders, and welcome to BCR's morning market analysis. Let's dive into the latest movements across the US dollar, crude oil, gold, and the Australian dollar. First up, let's have a look at the DXY. The dollar softened slightly on Wednesday, trading below 99 after a strong rebound earlier in the week. Markets are now holding steady ahead of key labor data, particularly weekly jobless claims later today and the all-important May employment NFP report due this Friday. Despite renewed pressure from President Trump for lower interest rates, the Fed appears in no rush to change its current stance, with most officials signaling a preference to hold steady for now due to continued trade uncertainties. From a technical perspective, the DXY remains under pressure. It's still trading within a descending channel and staying below its 20-day moving average. Momentum indicators like the RSI also suggest a bearish tone in the short term, with potential to retest support levels seen earlier in the week. Next up, let's have a look at WTI crude oil, which edged down a bit to around 62.20. There's been some relief in supply concerns as OPEC continues with planned production increases. Additionally, recent rainfall in Canada has helped ease wildfires, allowing some oil operations to restart. The drawdown in US crude inventories, a much larger drop than expected, and ongoing geopolitical risks, especially involving Russia and Iran, continue to offer underlying support to oil prices. Technically, WTI is still holding above its 20-day moving average, which shows some strength, some short-term strength. But upside momentum seems to be fading a bit as prices struggle to break through the resistance zones near $64 to $65. If that level holds, we could see a pullback towards the $62 mark. Next up, let's have a look at gold, which rebounded to around 33.70 on Wednesday as investors sought safety amid rising global tensions and ahead of key US data. There's some renewed tension in gold with trade policy deadlines looming and potential for further dollar weakness following new tariff implementations. The technical setup remains constructive. Gold is trading above its 21-day moving average, with RSI pointing upwards and staying above 50. Bulls are now eyeing a push towards the $3,400 mark, provided we see a firm close above the 33.71 resistance. On the flip side, if prices slip below 33.25, some short-term weakness could emerge. Lastly, let's have a look at the Australian dollar, which found its footing around 64.80 after a sharp fall the previous day, supported by a softer US dollar. Locally, GDP growth came in weaker than expected, raising expectations for another RBA rate cut, possibly as soon as July. Even with that weak data, the Australian dollar is holding up fairly well. On the daily chart, the Australian dollar continues to trade within an upward channel, with momentum still favoring the bulls. Immediate resistance is seen around 65 cents, and a break higher could open the door to fresh multi-month highs. Well, that's all for today's update. Stay tuned, stay sharp as the markets digest shifting headlines and technical cues. We'll be back tomorrow with more insights. Thanks for tuning in and have a great trading day.